It's not a good user experience, and it's not one that I think the crypto industry can practically expect people to just accept when we have competitive products on chain and when self-custody and transparency become important and table stakes. But I think the onus is on on-chain providers to really get up the curve in terms of providing a product that meets the requirements or expected performance behaviors of traders. Traders are very uncompromising when it comes to what they expect. Rightly so.
Everyone, and welcome back to another episode of the Market Run-Up. I'm your host, Erin Gambrel, but you guys know me as the Blonde Broker. Today's special guest is none other than Ben Celermajer. He is the CEO of Synthetix. Let's welcome him to the show. Before we go into some questions, I want to take a step back and talk about macro and the markets as a whole. I think we've, seen markets become incredibly sensitive to every Fed meeting, inflation prints, and liquidity injections over the past couple of years. And it feels to me like macro is driving almost every single asset class. Looking at over the next 12 to 18 months, what is one macro variable that you're watching more closely than anything else, and why?
Yeah, I think it certainly has been an interesting couple of years for the reasons that you mentioned. I think for me, it's still a lot about global dollar liquidity. I do think that crypto prices historically have really tracked the availability of money more than any specific policy path. And whilst I think that things like CPI prints and interest rates can create headlines and can create short-term noise, like we saw last night with an interesting CPI print. I do think it is the long-term sustained growth for this asset class has tended to be around global M2 momentum, Fed liquidity, and dollar strength. I do think that has changed recently. So having said that, I think that's the most important thing. I think there is an overlay that's very important, which is just the kind of AI vortex that we've seen this last probably 6 months, which is just like we've seen M2 momentum increasing, but not much of that translating into crypto. And I think it's just the AI fever that has gotten everyone, that's become the vortex for all sources of liquidity that have probably hindered what otherwise might have been a good time for crypto, in my opinion.
Yeah, absolutely. And on the crypto topic, Bitcoin was originally, it was pitched as an uncorrelated asset. And I think, but during most of these risk off events, it's still kind of traded like a leveraged tech stock. What do you think has to happen before crypto truly begins trading as its own asset class instead of simply following those broader risk markets?
Yeah, I think it certainly has done so, more so recently than previously. And I think that's as you've got a lot of institutional capital that's really treated it like a risk asset. Yeah. And so I think some of it's around education as to what Bitcoin is, how it operates, as opposed to thinking of it as a high leverage beta to the stock market. And I think some of that will come with more permanent capital entering the market. I think that type of capital where it's allocated because they perceive Bitcoin as a reserve asset, as a hedge against the dollar, or kind of centralized finance, as a growth sleeve within a portfolio. I think those kind of more sticky allocation buckets, as Bitcoin ends up in those, it will build that solid base of performance and will act more like a hedge or more like a reserve. But I think whilst it's a high beta asset, or perceived as a high beta asset to the market, it's a bit hard for that cycle to break.
When we talk, I guess, about market cycles, you guys at Synthetix, you've been around for a while now, and I think y'all are consistently building. I see it on the timeline. Why do you think now is the perfect time or the right time for the protocol, and like what has changed in the market that makes this next chapter different than previous cycles?
Yeah, I think there are a few exciting aspects that kind of lean into that. I think the first, and I'll say this without going too into Synthetix specific right now, I'll touch on that in a minute, but I think it's like we've really seen a bit of a frustration with crypto this last 6 months, or even 12 to 18 months, in that for reasons we mentioned above, where people thought it should have been performing, people have seen global debt increasing, they've seen inflation, they've seen kind of the macro environment that should have treated crypto well, but it hasn't really treated crypto well. I think that frustration is translated into people not necessarily, or people being a bit fed up with how crypto has given itself a value proposition in the market. And I think that as this kind of intangible asset without, like I'll speak Bitcoin specifically, without cash flows or anything like that, it's become very hard for investors to get around absent of good performance. And so I do think that there's a second narrative that will persist through the market, or will kind of help the crypto market, which is crypto native cash flow generation. And that will allow assets to kind of operate and behave independently of the macro cycle. Because once you do start seeing things like revenues or buybacks or cash flow, it becomes a lot more tangible for an institutional investor, and becomes a lot more familiar with just how they traditionally invest, as opposed to just like this YOLO, Bitcoin's a hedge, and then it ends up not being a hedge. And so I think that has set products like Synthetix up well, where once you can get that kind of cash flow part of your business humming, it really does become an independent valuation mechanism that's disjoint from the market. And so that's certainly something that I think I'd be looking out for Synthetix over this next period.
Well, and another thing too is that you guys have been working on infrastructure and becoming not just another DeFi application. So if someone wasn't familiar with the product, where does Synthetix actually fit into the future financial stack, and why is that position so important for the community as a whole?
Yeah, I think the way that we've positioned Synthetix has historically been as a bit of an infrastructure play. And when we say infrastructure play, it's kind of this layer in the middle of settlement and custody, or like specifically very user-facing applications. Whilst perp is certainly a user-facing application, I think where it can be infrastructure is like we see in traditional finance, like futures products they underpin a lot of complementary or supplementary products. People can build strategies on top of them. They can hedge risk on top of it, on top of futures or derivatives. And I think in a world that does become like where finance is open and products are open and composable, in that anyone can leverage the product and build applications, build vaults, build strategies, build product on top of it. Having something like a perp or a derivative more specific, or more generally, is a very enables itself to being like this infrastructure layer where it can be at the heart of lots of other products. And I think that's where any perp or any product like Synthetix wants to position itself, so that it can kind of ingrain itself more deeply within the ecosystem, as opposed to just being a user-facing product. And so that's where we've always looked at ourselves, as a bit of an infrastructure that enables DeFi.
Well, I think you touched on perps too, and I just did a deep dive on my page. That's kind of like an entry level discussion article on perps, and I know you guys really hammered down that side of the market. Why have perps become such an important part of the mature financial markets, and where do you think crypto is going or heading in that direction with perps?
Yeah, I think perps are a really interesting evolution on derivatives. I think they're fundamentally not too distinct from what you'd see in TradFi, and they've actually taken a lot of the lessons and learnings of TradFi derivatives when the perp was designed. It was designed in a while ago now, in 2014, by BitMEX, and I'm a bit biased, but I do personally think it's one of the greatest innovations that crypto has offered the financial world thus far. In that, I do think having a 24/7 venue where price discovery can happen any day of the week, any time of the day. These products don't have the kind of contentious areas that cause a bit of headache in TradFi, like rollover periods, expiries, delivery if they're physically delivered products. And I do think that having this product where it allows anyone to get exposure, long or short, with a great degree of capital efficiency, all throughout the week, all throughout the day, is a strong value add for finance as a whole. It really unlocks the ability for anyone who may be confined to markets that trade 8 hours a day, 5 days a week, or 23 hours a day, 5 days a week, as commodities equities or commodities do historically. And it allows people to kind of take that personal opinion or express an opinion on where they think the asset's going with a high degree of capital efficiency at any time of the day. It also allows them to hedge or kind of transfer risk at times that may be important to do so. I think we saw some great examples, even just recently, where we've seen President Trump make some interesting calls over the weekend that have resulted in big gaps in stock markets or commodity markets as they come online Monday morning. And so it's really hindered people's abilities to express a position or hedge themselves over weekends, where that is possible now. And we have seen that be possible with perps.
Yeah, it only takes one post sometimes from him.
Yeah, often. I wouldn't even say sometimes.
Well, I think what's interesting too is that perps have become one of the largest trading products in crypto. I think most of my friends are actively, doing perpetual futures trading, and some that maybe aren't want to get into it. And so I think directing them towards Synthetix really, really works. In many cases, though, they generate significantly more volume than spot markets, which is really interesting. I think I forget what the statistic on Kalshi was about perps, but it was like 63% of their users are perp trading now, which seemed like a lot. I wasn't really expecting that, but I think a lot of investors still don't really fully understand why traders prefer them. Why do you think it is so dominant, and what do they allow traders to do? I guess you can hedge yourself. So let's say I'm very bullish long term on Bitcoin, but when there is market turmoil, sometimes I do want to be able to hedge my trade against Bitcoin and maybe short it. So I guess why do you like it so much?
Yeah, I think as I alluded to before, I think spot is an expression of ownership, which is very powerful, but perps to me is an abstraction on top of that, which is really an expression of short-term opinion in terms of which way the market's going, but also risk. And so, like you say, you can hold a big spot position that you may or may not want to offload at certain times. If you have a really big spot position, you may not be able to offload it as easily as you would be able to offload a perp, where they're just contracts you're trading. You're not looking for a counterparty to take ownership of a product. you're looking for someone to either express a different opinion, and also for the other party taking that different opinion, it's a lot easier for them to do so because of the capital efficiency of perps. You can trade these things with 2 times leverage, 5 times leverage, 10 times leverage, which just from someone being able to kind of manage a very large book becomes a lot more effective for them. And so I do think it allows you to transfer risk at much greater scale. It allows you to express an opinion at much greater scale. It prevents you from having to kind of transfer ownership of an asset that you either hold and don't necessarily want to transfer ownership of if you have longer term opinions that may be different to your shorter term opinions, or acquire an asset that you don't want to hold long term. And so I think it kind of works on those multiple levers where it is capital efficient, you can long or short it, you can get continuous exposure to it, it is 24/7, and it does allow you to transfer risk at scale.
And I think I just saw a statistic that Synthetix perps, you can correct me if I'm wrong, but on Ethereum mainnet, just crossed, was it close to 2.3 billion in total volume with like 3.8 million in open interest? Is that correct?
Yeah, correct. So we launched in January this year under a private whitelist phase. We went through that. We got through that. That was kind of after 8 months of building, where we were really testing the product in market, and we recently opened that up about 4 to 6 weeks ago to the public. And so that's open now. Since launching in January, we've processed $2.3 billion in volume, as you mentioned. Looking to scale that, looking to add more markets, looking to continue to grow, but still very early in our cycle at this stage.
Well, what has been driving that traction so far, I guess? Would it be like native ETH margin or on-chain settlements? Like,
Yeah. So we're looking to differentiate ourselves a little by being on Ethereum mainnet, which allows us to do some unique things, or we believe unique things at this stage, like offering ETH margin. We do have multi-collateral capability, which we believe is a strength in this market. We have Synthetix. Taking a step back, Synthetix has historically been a very different style of product. So even though I say we launched in January this year, Synthetix has been around since 2018, and we've been through multiple iterations of what a perp looks like in crypto. I think previous cycles really rewarded experimentation, and that allowed Synthetix to kind of try multiple different things, multiple different versions, multiple phases of its product life cycle. And I think we are in V4 of our perp now. And I think we've really honed in on identifying what we believe to be a bit of a gap in the market, which is at the end of the day, perps traders really want an institutional grade product that has the throughput requirements that they desire, the latency requirements they desire, but also some of the characteristics that we believe Ethereum embodies and kind of has natively, like self-custody, that allow people to hold their assets on chain without needing to necessarily hand them over to a trusted third party. And so by building on Ethereum, we believe we can through a hybrid architecture, which is an off-chain matching engine, so it can achieve the performance of your centralized exchanges, but on-chain settlement, so it kind of does have the Ethereum characteristics of self-custody and security, deliver a product that is differentiated in the market. Being on Ethereum also comes with the benefits of composability with other products, and so that's where the things like multi-collateral really come into play, where we can offer margin in different assets because there are very deep liquid spot markets in which those assets can settle should we need to, or should people get into precarious situations where we need to liquidate that collateral on our exchange.
Okay, that's good to know.
Hopefully
how do you see this positioning Synthetix long term versus the like L2 perp dexes that we see?
Yeah, there are a few of those now. Look, they're hugely successful. We've seen Hyperliquid, who really kind of broke the ceiling on in terms of what on-chain perp could look like.
Yeah.
I think historically there was a lot more, at least at Synthetix, there was a lot more focus on what needs to be on chain and how decentralized you have to be, and really building on chain first, product second. Or working out what product could fit on chain. I think Hyperliquid took the other approach where they said, we want to build a great product. How can we put that on chain? Or what parts of that can we put on chain? And I think ultimately where that landed was users prefer a great product. They want a great product that can settle what they want, that there are guarantees around the prices that they can execute at, that they can operate in a way that is at least close enough to centralized venues that the experience feels fast, feels good, feels very legitimate, and I think that's where Synthetix of today is trying to emulate its success. I think we're trying to do so in a different field where we still do see, despite having gone through multiple cycles of crypto, and I think L2's launched in 2022 and had a huge push from the whole Ethereum community even for adoption of L2s to really leave the L1 as a settlement layer. But even despite that whole push, despite multiple other L1s like Solana getting a lot of traction or Binance Smart Chain getting a lot of traction, we still do see the majority of stable coins, I think upwards of 60% of stable coins, upwards of 60% of DeFi TVL still on Ethereum mainnet, despite everyone's best efforts to get a lot of that activity off of Ethereum mainnet. And so that's why we believe being on Ethereum mainnet just opens a realm of opportunity that doesn't exist on your own L2, where, as I mentioned before, with multi-collateral, any L2 that's launching as its own roll-up or its own L2, or kind of leveraging another L2 that exists, has to develop deep enough spot markets, deep enough ecosystems, create its own ecosystems in order to get that composability or become that infrastructure layer that we talked about before. Whereas we believe being in the same venue as Uniswap's main instance, as Aave's main instance, as a lot of other DeFi protocols' main instances, there's a lot of other capital that rests and sits on Ethereum either productively or unproductively. Being co-located with that just has huge potential downstream advantages that are hard to quantify right now, but we believe long-term will be hugely advantageous.
Well, if you guys execute everything that you've been talking about and do it exactly, I guess, as you envision, where do you see Synthetix over the next 5 years? Like, what does success look like?
I think where we see this is that we believe that traders will, where we hope to get Synthetix is we hope that it ends up at a place where traders choose it because execution and risk management are competitive with centralized venues or the best on-chain venues. We believe that it's a venue that's attractive enough that builders just want to come and integrate their products on top of it. They want to build composable products on top of it. They believe Synthetix is reliable. It's liquid enough for them to do so. Be it strategies, be it covered call vaults, where an options protocol or an options warehouser may want to leverage an on-chain perp in order to attract on-chain liquidity. Be it a basis trade like Athena. If your audience is familiar with Athena is a basis trade stablecoin effectively, and so the way that they maintain stability for their stablecoin is they long the spot asset and they short the perp. The value of the long equals the value of the short, and therefore you're delta neutral, but you capture the basis trade or the funding rate that perps offer in doing so. They do so on a lot of centralized venues because of liquidity and security guarantees that they get with them. We believe we hope to be able to provide those liquidity and security guarantees and even exceed some of them where on-chain custody does matter. So I think it's things like that. I think it's where we're a venue that's seen as very credible, that's composable and reliable, because risk management becomes competitive on chain, because it's liquid enough. I think that's where we hope to get to.
It's really interesting, what you guys are building, and I think despite all of the innovation happening on chain, centralized exchanges, you mentioned a couple, they still process the majority of trading volume across crypto. What do you think ultimately causes that balance to shift towards decentralization or decentralized trading infrastructure over time?
Yeah, I think this answer's probably evolved a lot for Synthetix over the last, since it launched. But I think it can't be ideology. I think a lot of crypto rested on the laurels of decentralization will win historically, and I think that's kind of your more ideologic perspective, where people will end up not using centralized exchanges because they believe in a decentralized product, and I don't think it can be that anymore. I think what you need trust, control, and a competitive product that scales. I think that's why centralized exchanges have continued to win, have continued to probably laugh at DeFi for a little while. But I think where DeFi wins is when a product can be built that is just as fast, has a similar enough liquidity profile, is easy to use. I think the user experience one's a big one as well. I don't know if many of your users have used DeFi, but the historical kind of experience of needing to manage private keys and manage wallets and move money, and if you get any number in this long string of long alphanumeric string wrong and your money's gone forever, it's not a good user experience, and it's not one that I think the crypto industry can practically expect people to just accept. And so again, I think that's in the not ideology camp. But I think it's really when we have competitive products on chain, and when self-custody and transparency become important and table stakes. I think we've seen black box risk events like FTX happen historically. There was another exchange, I won't name names, a little while ago that got hacked for $2 billion, a centralized exchange. And they got out very luckily. I mean, it goes to show the size of these exchanges that they plugged a $2 billion hole pretty quickly. But again, it kind of comes down to you inherently adopt the security of an external party when you use a centralized venue. The hope is that you don't have to do that on chain, but I think that the onus is on on-chain providers to really get up the curve in terms of providing a product that meets the requirements or expected performance behaviors of traders. Traders are very uncompromising when it comes to what they expect. Rightly so.
Do you remember your first time? Do you remember the first time you used a decentralized product?
Yes. Yes, I do. It was, for me, it was in 2017. It was a product called, I'm blanking on the name right now, but it was the first, it was before Uniswap. It was, what was it?
Was it PancakeSwap?
No. It was, I'm embarrassed. I'm forgetting this one. It was, it doesn't exist anymore, but it was an order book exchange on Ethereum, and it was awful. It was awful to use. What was it? I might look this up because it's a good one. I
know. I think mine was either PancakeSwap or Uniswap. Like,
Ether Delta.
Really? I have not heard that in a long time.
Yeah, and so they launched in 2017, and I used them as a way to get some like different assets that were on Ethereum. It was kind of like a way to do it back then that I guess a friend got me onto, and it was just so convoluted, and how you had to get onto it, how you operated it, how you logged into it. It was all through MetaMask at that stage. It was just a crazy. I think if I go back to what I used to do back in like 2017, 18, 19, 20, the kind of mental gymnastics that I personally jumped through to justify doing all this stuff was insane. I think I look back and go like, how we ever expected to onboard the world to DeFi, and kind of make them go through the hoops that I went through and many others went through was an insane insane kind of haze that we all had over our face in terms of what
kind of sketchy, like
expectations were. It was super sketchy. I mean, you'd just be depositing your money onto this thing that you had no idea what it was, trusting it worked, trusting
there's some
smart
hash
contract that no one had ever looked at, or there was some hash, and then you do something, and there'd be between 30 seconds and minutes where you're like, did it happen? Is my money gone? Is it gonna come back? Is it like I just kind of have to sit here and wait. And I go on this website called Etherscan or other, and it says pending, and it was insane. It was insane. And in all honesty, it's no wonder that DeFi never really took off back in the day. Other than the enthusiasts and the idealists, or the ideologists, I think it's we've come a long way since, and we've come to appreciate that we can't expect people to put up with that experience for the sake of decentralization. So I think that's a long way of saying I think that where we are today has to be product focused and has to really be focused at user experience and providing a Web 2 experience on a Web 3 foundation.
You're right though, like these new retail traders, they don't know how easy they have it, right? Coming in now, I want to say it's easy, but like I guess if you could tell the new wave of retail traders one thing, like they want to come in, they want to learn about markets and get involved, what is some advice that you would give them?
If they want to learn about crypto markets, experience crypto, experience on-chain products,
all of it, because we do need we still have not, I think, reached mass adoption.
No, not even close. Look, I think listening to podcasts is a fantastic way to do so. I mean, yeah. I don't have to pitch to you. But I think it's just a great way to understand like how people who have either been in the industry for years, some of them decades, have seen this evolution, have lived through this pain, have kind of come out the other side and been like, we can't do things the way that we have, and are now building products that really, I think the realization for a lot of these individuals is they're building products now that have really are really focused on how you can actually create an experience that onboards people.
Yeah.
And I think where we see a lot of new traders, and some of them are like much better than me at doing this, is the simplicity at which they onboard and use these products is insane. Like most of them are on their phone, they're never on a desktop, they don't even know what a ledger or a trezor is, and it just works for them. And they're trading assets more than I am. They're kind of more in touch, given some of the tooling now has just evolved beyond where my archaic set of tools lives. And you really have some really nice user interfaces, some really nice product aggregators, some really nice product experiences that don't at all feel like crypto, but let you onboard to what is underpinned by crypto. Or products that are underpinned by crypto. And so I think the best way to do so is really just to to listen to people who are in the industry via or through podcasts, and then just start clicking around yourself. And if you have to go through more than 2 or 3 hoops and buy 2 or 3 products, you're probably doing it a bit wrong in today's day and age, or kind of going down a path that you maybe shouldn't go down.
No, I think it's great, and you're right. Some of these traders, what's the term that we've been saying? They're locked in.
Locked in, yeah.
Yeah, 24/7. They're definitely watching volume on all these like dex screeners and whatever other apps are using. A lot more than we are, but yeah, I'd say we're pretty busy ourselves. We're busy, Ben.
Pretty busy. I'm super busy.
Okay, this is my favorite question that I get to ask my guest.
Yeah.
And I love it. I love it so much. And you can answer as yourself, but also for Synthetix. What is the legacy that you want to leave behind on this earth?
Legacy. I mean, that's a very good question. What's the legacy I want to leave behind on this earth? Look, I mean, personally, it's very different to Synthetix. I'll answer for Synthetix first, but I think for Synthetix, it's really, I just want to create a great product that allows people to express views in a way that's safe, secure, and do so in a way that's a lot more efficient than the way they do so today. And something we haven't really touched on this chat, we can after if you want, but is that I think where the evolution of perps specifically will come over the next, I mean, it's happening right now, but really like will become exponential over the next year or two, is that it will unlock the potential for individuals to do things that they could never do before, and just create financial opportunity or manage financial exposure in ways that they could never do so. And what I mean by that is you've now got the potential for any market, private or public, to be 24/7 tradable, but also be able to create a very unique portfolio in that if you think about like where Synthetix is today, we're currently just crypto assets on our perps text that will evolve into commodities and other real world, like commodities, equities, other real world assets. We allow you to do so with dollars, so USDT is our collateral, but also ETH, as you mentioned before. But it doesn't just have to be crypto either. Like there's a very near world in which equities are tokenized on chain, properties tokenized on chain.
Oh yeah.
You've got lots of different RWAs. A whole other conversation, and all of a sudden you could have a venue like Synthetix, not today, but soon, where you can have like your entire portfolio collateralizing a whole view of expressions that you have on the market that you're able to manage and expose 24/7. You could have, and look, I'm not advocating for for putting your mortgage on chain and using that to leverage a Bitcoin position or anything, but you can truly have like a cross, like a cross margin portfolio, a basket of assets, be it equities, commodities, crypto, that is your capital on which you take these short-term views on which way the market's going in a very capital efficient manner. It just allows for this whole other realm of collateralization, correlation trading, risk management that I don't think exists today. You could have a basket of, I'm trying to come up with examples on the cuff, but you could have a basket of Korean equities, which you've got a short on you've got, well, I don't know why you'd short QQQ at the minute, but you can have a basket of Korean equities that you hold spot, and you can express a short view on the QQQ in like margin by that Korean equity position. And so I think it's just a crazy world in where the opportunities at the minute, why I'm struggling to come up with some of them, is I think they're so incomprehensible just because they're not possible today. And so for Synthetix, if I take a step back and stop my waffle, it really is the ability to express financial views in a way that you can't do so today. I think personally, this is probably a bit of a cop-out answer, but I'm a big family guy, and so I've got 2 little girls at home and a wife, and for me, I just want to provide them with the best experience, and I think it's probably a very modest answer, but I think for me, it's about giving my girls the best opportunities that I can, and leaving a kind of good, solid footprint for them to grow up and live on well beyond my time.
No, it's not a cop-out answer though. It's you only live once. I don't want to say YOLO because it's true. It's like spend that time that you have with your loved ones and with your family, and that quality time is so important. And I really wanted to for Father's Day, a lot of my guests, actually, that's like, that is a very popular answer because a lot of these guys that are in the space, they will put their family first. And I love it. I just wanted to like shout out all of the dads and the moms that come on here and make time for my show to come on and talk about their protocols and products. It's really awesome, but it's a wonderful answer. I'm glad you said that.
Yeah, no, I appreciate that. And I think, one interesting one about me is one day I will own a farm. That's a goal that I'm working towards. Own a farm.
Cows, chickens, you want it all?
I'd love cows.
Cows, okay.
Cows are where I think it's at. No, I think I'd love to own a farm one day, and I think that's on the horizon as a life goal that I want to accomplish.
Yeah, and I'll come visit. We'll come do like a offsite, bring Tom and everyone to the farm and make us work and shovel like horse stuff.
That's right. I'll give you the full experience.
We'll do it. Well, we'll go ahead and wrap up there. So I want to say thank you to our audience and everybody that is listening to this episode. Ben, I appreciate you so much coming on the Market Run Up.
Cheers. Thanks for having me. Appreciate it.
Thank you. If you guys liked this episode, make sure to tune in for more. Please give us a like, follow, subscribe, and we will see you all next week.